Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company, LifeChain. Our webinar title today is Hold or Sell Losing Positions in Malaysian Stocks. So welcome everybody to this webinar. My name is Shen Chu. I'm the moderator for this session. Now, the FBM KLCI is down more than 5% over the past 1 week. So I would imagine that many of us would have our portfolio, to see our portfolio having a drawdown, right? So with all these possibly lower profit or unrealized loss, what should we do? Should we hold or should we sell them, right? So this is a pertinent question that we're going to address in this webinar. So before we begin, let me go through the disclaimer. Whatever we discuss in this session is only for educational purpose. In no way that we give any recommendation for the buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He graduated with a bachelor's degree in mechanical engineering and has more than 20 years of experience working in the oil and gas industry. He started his active trading journey in 2014 after the completion of the Beyond Insights program. Now, since 2017, he has been coaching over 1,000 students in the foundation programs, and currently he is also one of the programs managers helping with the program development and enhancement, particularly in the intraday course. So it's none other than Mr. Koot Poon Khiat. Okay, Koot, how are you today?
I'm good. Thank you very much, Shane.
All right, fantastic. So we can't wait to learn from you about what should we do in our unrealized loss position. Should we keep our faith and hold on to them, or should we cut our losses? All right, so over to you, Kut.
Okay, all right. Thank you very much. Okay, let me take over the screen then. Yep. Okay. All right. So you should be able to see my screen. This topic was actually planned late last year, and at that point, I was thinking, hey, what should I talk about? And little did I know that, well, the timing of this is actually, I should say, a pretty it's pretty right, because right now we can see that the share market, not only Malaysia, across the whole world, is actually shaky now. Okay, and that is mainly because of the actions from US. Yeah, so I would say, yeah, good timing for this. And well, so in that case, since it's very relevant to all of you, well, do post me questions so that I can also answer you. All right. Okay, so first thing, so the topic is hold or sell losing position in Malaysian stocks. For those who are investing or already holding position, you know what I mean. Right, so let me just move on. Okay, so yes. Okay, now, so I understand that we may have a mixture of new investors and also veteran or experienced investors. Now, for the new investors, maybe you don't feel this. You may have just bought something and till now, things has been very beautiful for you, right? Yeah, so you don't experience anything. But then for veteran investors, you know that there will come to a point where you need to answer this question. Your position will come to a point where it becomes red, okay? It goes into negative, losing, and then you need to make the decision whether do you sell or do you hold. All right. Okay. So the thing is, how do you make your decision? Okay. And before we even answer that, looking at your losing position is a very painful thing. Okay. So painful. All right. Why is it painful? So first, I want to answer this topic from a psychological point. Some of you feel the pain because you are losing a lot of money. Okay. So the money part. All right. Now, then some of you are losing because to you, when you place an order, okay, it carries with you the hope. Maybe you want it for your retirement, or maybe you want it for your children's education, or whatever reason, right? So when you see red and negative, then you feel that your plan or your dream for your investment may be maybe shaky now, right? So these are all the reasons for for your pain, okay, the psychological pain. And lastly, some of you may even feel that this is a step at your ego, a challenge to your ego. So in work or even in the community, you may be a respected person. But then here, when you're facing a losing position, the market is actually telling you that you are very wrong. And the market even has a number to show you how wrong you are, right? So of course you get defensive, you get angry. And what do you do when you get angry? Can anyone tell me? When you get angry at the market, what do you do? Oops. Yeah. So revenge. Yes, correct. You get angry at the market. You want to prove the market wrong. You are right. So you will do revenge trade somehow. Okay. You want to show that the market is wrong. Okay. And yeah. So thank you very much. Many of your from the chat. Yeah. So some of you, you do revenge trade. You buy even more. Yeah. Okay. Some of you give up. Okay. That's different. Some of you want to just let's find some ways. So there's this psychological impact on you. Okay, but let me now address how you should manage all this psychological impact first. So first, now risking too much to the point that you really feel the pain. Okay, now for those who have joined, okay, so there's a lot of students from Beyond Insights. Thank you very much for joining me tonight. Okay, it feels very nice to have all of you here. Right. So anyway, for those who are not from Beyond Insights or those who have learned investing on your own, you may not have any guidance on risk. Okay, a lot of new beginners, when they invest in the market or even trade in the market, there's only one thing in their mind, winning. So they invest and buy in the quantity that they think they will win, and they never think about how much it will cost them when they lose. Right? Yeah. So they have no such plan. And of course, if something happens, maybe like right now, hopefully not, you will feel the pain and it becomes very difficult for you to accept it. That's the first thing. Second thing is now, so like I've mentioned earlier, some of you attach the idea of winning in this investment or this trade to your dreams. So when you see red in your account, then you feel very demotivated. All right. Maybe you feel that your dreams of financing your home will not come true, or your dreams of sending your children might not come true. So all these are the pain that you face. Okay. So what should you do? Right. So first one is on losing money. Okay, you may have your own plans, but let me share with you what we teach our students. And this is also what professional investors and traders do. All right. When they place an order, when they enter into an investment or trade, they are already prepared. What if that position loses? So the kind of risk that they put in is something that they can absorb or stomach. It will not cause them pain. It is annoying, of course, but it will not cause them pain. All right. So do note that in the future, when you have your own investments, when you calculate quantity, how much to buy, do not risk too much. Otherwise you feel the pain. All right. The market is volatile, as you can see right now. Anything can happen. Don't let the bad things that happen affect you too much to the point that it devastates your account. All right. Yeah. So that's the money side. Second thing is now, I mentioned that, seeing red in your portfolio is also a step in your plans. Okay. Yeah, you may see that, oh yeah, your plan of having something to do with your investments may go awry. Okay, let me show you what happens. Okay, what happens? All right. Okay. Okay. Now, so in investment, anything can happen. All right, anything can happen. So what that means is that you in the long run, if your strategy is sound, yes, you should expect to win. All right, in the long run, if you have a good strategy. But in the short run or in the meanwhile, anything can happen. Let me show you this. Okay, this is Lee Chong Wei's badminton career statistics. All right, he at one point was ranked number one in the world at one point. Let's see his statistics. All right, total win. Okay, this is total win. Okay, it's only 72 for this period. Okay, I don't know how much period that is. It's only 72, and he lost half of it as well. 37 losses. Okay, but that's okay. That doesn't affect him. He was still ranked number one in the world. So likewise for investment, as long as you have got a good and sound strategy, do not worry about the losses. Make sure that your losses are small and contained. All right, and then let your strategy, ride through all of this. How should I say? All of this market uncertainties, whatever. And in the long run, things will work out for you. Yeah, so have confidence. Now, of course, this is on the assumption that you do have a sound strategy. Right? If you don't have a sound strategy, then of course, please do go out and learn a sound strategy. Okay, you can learn from any guru. You can do your own back testing. You must have a sound strategy that should work for you. Okay, then the last one is, okay, so now, yeah, so back on the ego and anger, right? So if any of you ever feel angry with the market because you are losing, all right? So take this from me and also from the professional traders. The market do not know you. Any pain it causes you is not directed to you. All right. It's not directed to you. Yeah. So it is not your enemy. Don't feel angry with the market. In fact, if you harbor this kind of anger towards the market, it will cloud your decision and it will make you not being able to think what is best for your portfolio, such as revenge trade, buy even more. You want to prove the market wrong. All right. So don't do any of that. All right. Stay calm. All right, stay calm. Yeah. So even the best investors or traders, like Warren Buffett or even George Soros, lose. They do lose in their investments. For instance, Warren Buffett did invest in 2019, just before in the airlines industry, just before the COVID strikes, and of course that loss. That cost him losses, and that losses was, I think, around 2 to 3 billion from what I have what I've researched, you see. Yeah, so even Warren Buffett will lose, all right, but that doesn't affect him, all right, that doesn't affect him. And of course, even though 2 to 3 billion is like, wow, huge amount of money for you, but then for him, it is a smaller amount and he contains his losses, right? Yeah, so with that, of course, he can ride through all this market turbulence. Okay, so remember, have no feelings toward the market. It is not against you. You just need to follow your process. Okay, so now with emotions out of the way, you need to answer this question. All right. So in your losing position, should you sell, okay, or should you hold? Now, so you hold because you think that this negative position, this rate will actually recover. All right. That is the only reason why you hold. If you think that there is worse thing coming up, then you must sell. Okay, you must sell. Okay, so how do you make this decision? Okay, let me move on. Okay, so now for Beyond Insight students, well, they've learned how to review fundamentals. But then I don't have much time here, so I'll just run through this at a very high level. Okay, so there's two things that you need to review to make your decision, whether you should hold or you should exit. Now, the first one is internal to the company. You will review whether the company fundamentals has changed or not. Has things got worse? All right. Then the second review is you have to analyze the external environment, external to the company. You have to do market analysis and see what is the impact. Okay, so first, let us go to the internal one, the company review. Okay, now, so this is very, very high level, all right, very high level. So when you assess a company, you need to check, okay, the revenue trends. All companies, they exist for one sole purpose only, which is to make money, all right? And so if they fail to make money, of course, that will affect their share price. So you need to check whether their revenue, or you can call it sales, is still improving, stagnant, okay, going up, stagnant, or is it coming down? If it is, you need to find out why, right? So these are what that you need to do. Second one is, of course, on the profitability also. All right. So company wants to make, okay, they want to sell, but the money after they sell and deduct all their costs, whatever, they must be able to still earn some money. Right. So you need to check whether their profitability is still maintained, or do they have competitor and now they have to cut prices just to stay afloat and be able to sell. So you need to check all this. Then the last, of course, you need to also check on their business operations, whether things are okay, whether they're borrowing too much money, whether the operations is still smooth or not, and so on. All right. So you need to do all this to check what has happened to the company. Is it still maintaining, or this company is really going down? And then for that reason, you need to make your decision to exit. All right. So this is at high level. Okay. Now, so this is internal to the company, looking at the company only. But what happens in the company is not the only reason that drives the share price up or down. All right. The market outside, external to the company, is also another important factor. So I will just sum it very simply is, all right. So when you look at the external factors that affect the company, I want to just break them down to two basic categories. One is short-term issue. The other one is a long-term issue here. So when I say short-term issue is, now sometimes you know that the market really panic for no reason, or there's a short-term thing that affect the company, affect the industry, but it's only short-term, and there's a very fast recovery. Okay, an example is in last year, I think last year somewhere around July, all right, the Bank of Japan actually adjusted their interest rate higher up. And then after they adjust, suddenly the market take note of this. And in early August, the market around the world actually fall. All right, actually fall. So let me just see if I can show you anything right? Yeah. So the market falls, and the biggest dip was actually in okay, hang on. Let me just show you FBM KLCI. Yes. Okay. So this is our Bursa index. Okay. So last year you can see here. Okay. On the 5th of August, the price actually dipped the index numbers actually dipped very drastically. And immediately the next day, you can see it actually recovers very fast. All right. Yeah. So let me ask you. So this is the part where you need to have some macro knowledge. The change of interest rate for Bank of Japan, does it affect Malaysia? Does it affect Malaysia? Okay. Anyone can tell me. Carry trade. Okay. Let me give you a specific company to talk about. Okay, let's just look at the Naga, a Malaysian company. Okay, a Malaysian company. All right. So you can see here, Malaysian company, the Naga price fell down, deep. Then the next day it went up again. All right. Does it affect the Naga National's operation? I don't know whether they have any borrowings in Japanese yen or not. Maybe very little, but no, I think the impact is very little. So let's just say, for instance, if that is the impact that caused your account to dip, then you need to analyze what has happened, and then you need to assess whether, yeah, okay, whether the impact is short term, is it even justified at all? And you look at this, the next day price recover, then went back up. Price not only recover for Tenaga, it recovers for all the Malaysian company, even the Bursa index, right? Everything all recover. All right, so yeah, you need to know your macro, you need to know your macroeconomics to know whether such thing has any impact on our Malaysian companies or not. Yeah, so that's the short term. But okay, that's a short term. So if you are faced with short term and you assess it's short term, don't worry, you can hold your position. Okay. However, we do also have long-term issue. Okay. And examples of long-term issues are poor management, bad decision, or even when management making all the wrong decision for the company. One example I think was hang on. Yeah. Yeah. Okay. So you have companies that they shouldn't be investing in this area, but they did. Okay, and so on. Right. Then another one is technological advancement. Okay. Let me give you an example. Astro Malaysia. Astro, as you know, Astro Dish, the one that beams the TV channel directly from satellite down to your home. Yeah. So in the past, yes, that was the leading technology. You are able to receive TV channel from through a satellite. But is that still the leading edge for entertainment now? Right? No more. Okay, that's not the leading edge. In fact, nowadays we are using internet, broadband, whatever. You can even watch movies through your handphone. All right. So that is already obsolete technology. Right. So if your company that you invested is still into old technology, yes, you know this is a long-term impact. Unless they are able to change their technology very fast, if not, then you need to assess whether you need to get out or not. All right. Yeah. Then of course, emerging competitors and competitive age loss. Now, so the story for this one will be the Malaysian Glove Company. All right. During the COVID time, yes, glove company was the darling of the industry. Everybody knows that all the doctors and everybody needs to practice hygiene. Okay, gloves was one of the main thing apart from your mask, your face mask. All right, and Malaysia was positioned because Malaysia, we are one of the biggest glove manufacturers in the world. All right, so that's good. So I think in the first few months, let me show you. So you can look at Top Glove. Okay, in the first few months, yes, Top Glove and many other glove company here actually spike up. Okay, actually spike up. You can see here, price went from around $2 before. Okay, around when COVID starts, all the way to nearly $10. All right, five-fold increase, 500% increase in stock price. Okay, after that, as people learn to manage COVID, as we have got vaccines, then this industry is, well, it gets a bit shaky already. All right. Okay. Then the other thing that happened was China glove manufacturers started to see this market as lucrative, and they ramp up their production and even throw prices. All right. So as you can see, after that, price fall very slow, very fast. Okay, very, very fast. Within, I think, around 2 years, it dropped to even below what it was before the COVID. All right. Yeah. So that is the impact of competitors. All right. So in this case, if you know that it is because of competitor, and this in this case, competitor from China, they are ruthless, of course. They will throw prices. Do you think the stock that you're holding, if it's impacted, can it is that a short-term impact, or is that a long-term impact? All right. Should you hold your position, or should you get out first? Okay. What do you think? Should you hold, or should you get out first? What is the impact? So you need to decide. You need to decide, and you need to see. Exit, correct? Yes. Yeah. Correct. Get out first. Yeah. Get out first so that you can analyze and see what happened. If you get out wrongly, there's always chance to re-enter again. All right. And so for those who got out, yes, you are spared from this fall in the price. Until today, price is still below this $2 mark. It's still around here. Okay. Right. Let me move this away. Okay, yeah. Then the next one is geopolitical restriction, government, economic, industry sentiment. Okay, I put it all under here like a volcano. Things like this will explode and cause big impact to the world. And what is the current thing that is happening in the world now? What is causing all this? Causing the Bursa to come down, causing the US market come down, causing even Singapore and Chinese market again. Chinese is not spared. Yeah, tariff war, correct. That one is geopolitical restriction, geopolitical restriction and market trend as well. Yeah. So if you see this, do you think it is going to recover very fast? Will Donald Trump say, tomorrow, sorry, I will not place tariff, I was wrong? Do you think he'll do that? Maybe not, right? Maybe it will last for a few months. Yeah. So well, let that help you to decide what you need to do. All right. Because of all this impact. So this is a long-term impact. Okay. Now, okay. So what can you do? Okay, what can you do with all this? Now, so some of you are strictly fundamental analysis and analyst. Sorry. So you look at the stock, you analyze, a company has good cash flow and whatever, you make your decision. Okay. Now, some of you are a mix. You also look at the chart. All right. So for those who are not looking at the chart, I will urge you to also learn how to look at the chart. Why? Because it is not always that when the stock price comes down, you are able to trace exactly what has happened. All right. Yeah. So with that, if you cannot know what has happened, you cannot make your decision. All right. So if you cannot make a decision, of course, you will not get out. You are just holding and hoping for the stock to recover. So what you need to do is, if you learn how to look at chart, yes, when the chart price comes down, you can see chart patterns, and then you can make your decision. So you can think of having chart is just like having your security camera in your house. So apart from your good dog guarding your house, you also have security cameras or security alarm guarding your house. Another level of check for you. Okay, right. Yeah. So now, so in terms of looking at chart, what we normally do is in most investing and trading methods, we will have, let's just say for instance, if you place your entry at this level, entry E, entry, all right, then of course you place your entry, your order is triggered, and you want the price to go up. All right, you want the price to go up. That is what all of us want. So if the price comes down, you will want to cut off your investment, exit the market at a certain level. All right, at a certain level. So what is this level? We call this level, okay, let me put it in red. We call this level the stop loss. Okay, yeah. So if the price comes down to this level, then it will sell for you, okay, or you need to exit, all right, because your assumption of the market that you will go up is wrong already, all right, so you exit. And after that, if the price goes even further, you are already out of market, it doesn't concern you, and your capital is preserved. All right, so there's two ways of fixing this stop loss, okay, or the level that you exit, for those who are not familiar with this concept of stop loss. Now, some books, okay, teaches you how to set a fixed distance. So let's just say, for instance, some of the method outside is, oh, they only set a 5%. Okay, so whatever price you buy, let's just say, for instance, if you buy at $100, 100 ringgit, if the price of the stock drops down to 95, then you want to exit because you only lost 5% of the investment already. Okay, then others say 10%. All right, so you can use this method, okay, if you do not know any other ways. Okay, now another way is to use technical analysis, all right, and then look at the chart. From the chart, you decide on your support level, what is the volatility, all right, and then you use some volatility indicator to tell you what should the right level be. Maybe the right level is not at 95, maybe it's at 93, okay, or maybe it's at 92, whatever it is. Yeah, so you have those methods to tell you what is the right level to set your stop loss. Okay, now of course, this is the better way. Okay, why so? Let me show you. Hang on, yeah, let me show you an example is, okay, not, okay, I just use the nugget for now, okay, yeah. So in the past, can you see from this chart of the nugget, in the past 2023, 2024, the price movement is very nice, small and steady. It goes up nicely. Even if the price drop, it also dropped very little. Example is this case, over here, right? The price was at $11, dropped to $11.30, dropped to $11, around 30 cents, 40 cents, or even 50 cents. Okay. Yeah. So the price was how should I say, the sentiment was stable, things goes up nicely. But then look at current. Okay, so if you were to set your stop loss then, or maybe based on 40 cents, 50 cents, maybe you're right. Right. So you set your stop loss, okay, it doesn't hit your stop loss, and then it can continue to go up for you. But look at the current one, all right? Can you see that the candles or the prices now move even more violently than what it was? All right. Yeah. So with that, if you set your stop loss too near, maybe it will kick you out even when the trend still is still maintained, still nice. All right. Yeah. So what you need to do is you need to assess what happens currently, what is the volatility level, and then you set your stop loss based on that volatility. Right. Yeah. So that's why in using technical analysis, using the volatility indicator, that helps you to, helps you to decide what is the best level to set your stop loss. Okay. So for those who are not familiar, have never seen how a stop loss works, this is just an example only, right, of how a stop loss looks like. Yeah, so the point when you place your order, let's just say this one, the blue line, the first line is your buy. Then at that point itself, okay, let me just draw a line. Okay. Okay, so this is your buy order. Okay, your buy order, the blue line. So let's just say, for instance, you buy at $14.96. At that point, the moment when you want to place in your buy order, you already set a level so that if the price ever comes down to this level, you know that you are wrong and you need to get out. All right. So this is how a stop loss looks like. Okay. Yeah. So anyone has never used or well seen stop loss in action? Any one of us? Oops, sorry. Yeah. Anyone? Okay. Okay. So it seems that everyone is very familiar with stop loss. So that's very good. Now, okay, since this is a Bursa sponsored webinar, and we are talking about Malaysian stocks. Now, so in Malaysia, in the Malaysian stocks, there's not many. Sorry, in the Malaysian broker, there's not many platforms or broker platforms that actually offer stop loss. All right. So you need to do some workaround. All right. So we have recently had a talk on the Mumu platform for students. And then when we spoke to them, they also offered what are the workarounds for the stop loss. So Mumu stop loss doesn't work exactly like how we used to use. Okay. And you need to do it as a workaround. So you need to place your order, get your order triggered, and then only place your order. All right. Okay. But that aside, okay, that aside. So for other platforms that do not support stop loss, what can you do? All right, what can you do? So there's one thing which you can do. Okay, actually there's two things that you can do. The first one is, all right, the first one is you need to set a mental stop loss. So just like what I've mentioned earlier. All right, so you want to buy here. Okay, you want to buy here, right? You want to buy here. Okay, you want to buy here, and then you calculate, you look at the chart or whatever, and say that this is the level I want to exit. So I call it SL, stop loss. Okay, so you can mark this in your chart if your platform doesn't support stop loss. You mark this in your chart, and then you monitor the price. So if the price goes up like this, then okay, good. If the price comes down, okay, and when it reach to this level, then the next day you will trigger a sell order to exit. Okay, so that's what you can do if your broker does not support stop loss. Another thing that you can do is this. Okay, so some broker platform, even though they do not support stop loss, they do have alerts for you, price alerts for you. So what you can do is you can set a price alert for this stop loss. Maybe it is at, let's just say, for instance, $19.70. Okay. You can set an alert, right? So when the price reach to this $19.70, then an alert will sound for you, maybe in your mobile apps, right? And then you can go into your platform and then do your exit. Okay, trigger your sell order. So that's the other thing that you can do. Okay. So all these are manual. Okay. All these are manual things that you can do. Of course, if your broker platform supports automatic stop loss, that means when you place your order and then it can sell for you automatically without you even looking at it, then all the better. Right. Yeah. But short of that, these are the two things that you can do. Either you manually look at it every day, or you set an alert so that it triggers you and sound you an alarm to exit. Okay. Anyone has ever used this method, the manual way? Or everybody has broker that supports stop loss? Okay. All right. So some of you have done that. All right. Or, well, maybe since there's so many of you, anyone has ever encountered any Malaysian broker that do support automatic stop loss? You can share with me, and then we can share with others as well. Okay, all right. So some of you mentioned that the UOB alert does not work. Okay, I'll take note of that. Right. Not very familiar with the UOB platform, but then okay, maybe we can take a look at some point in the future. All right. Yeah. So do use this. Okay. Do use this stop loss in case you ever need any. Okay. Now let me go to the next part. Okay. 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 All right. So from Tiong Kun says RHB can set stop loss and buy stop and sell stop. Okay, that's interesting. All right. So maybe that's something we can introduce to others in the future. All right. Thank you very much. Okay. Now let me move on to the next part. Okay. So I've mentioned earlier, all right? I've mentioned earlier that yes, you either hold or you cut loss, and you need to cut loss if the impact onto your stock is long term. poor management. Okay, company not doing well. They are in a competitive market. Their sales are dropping. Okay, so you need to cut loss. But however, in all our experience dealing with students for many years and even talking to the public, we know that cutting loss is a most difficult thing to do. All right. So at this point, I want to pause and ask all of you. Anyone sees your position in red, you know you need to cut loss. Okay, you know you need to cut loss, and yet right now, currently, you find it difficult to pull the trigger to cut loss. Okay. Anyone feels that challenge? Okay, so we have a few who raised their hands. Okay, let me just see. Right. Yeah. So yeah, it's very painful, right? So back to what I've mentioned earlier. Well, seeing your account in red is painful, but then these are the things. I mean, yeah, you need to think calmly, get your emotions aside, and then make the right decision. Now, okay, so if you find it hard to cut loss, okay, let me show you, okay, why it is necessary to cut loss. So beyond insight students have seen this many times. Okay, let me show you this. Hang on, let me just look for my ticker. All right, okay, just 1 minute. Okay, anyone is familiar with Malaysian Airlines? Okay, Malaysian Airlines. Malaysian Airlines is no longer a publicly traded company, no longer listed in the exchange. But in the past, it was one of a very strong blue chip company. Yeah, let me see if I can find my screenshot. It was one of the blue chip companies. All right. Okay, but then of course, as you know, okay, let me show you the stock chart. Okay, yeah. All right. So this was stock chart all the way from 2020. Okay, this was $5. Okay, now I don't have a nice stock chart for this because the company has already been delisted. It doesn't exist in the market. So these are all the old snapshots that I can find in the internet. Yeah, so you can see last time it was hovering around $5. Then after a while, drop until 20 cents. And I think it was delisted of somewhere around 2014. What happened in 2014 for Malaysian Airlines? What happened in 2014 for Malaysian Airlines? Anyone knows? Delisted, yes, correct. But was there any incident that happened? Yes, correct. So we have two major, very unfortunate incidents, which even involve loss of life. Okay, but that incident also bring down the whole Malaysian Airlines. But look at this, way before that happened, the stock has already come down. All right. There's no point holding to that stock anymore. All right. So if you were an investor in Malaysian Airlines in the past, which many of you will not be because of this one, these are only for the older generations. Okay. Your parents probably or your uncles, yeah, you should not be impacted. But yes, you could look at this. The company was not doing well. Airlines had a lot of competition from Air Asia, of course, and then internally they also have mismanagement. All right, big mismanagement. They also lose money year by year. And in fact, I think they were saying that every day they lose $1 million or something like that. All right, so every day is a money losing day for them. All right, so if you were in that company investor, you need to look at it. Look at what has happened. Losing money. Is the sales going up? Is it profitable? If it is not, do exit. Don't care. All right. And those who did not exit, of course, there are people who did not exit. They are the one who carry the stock price all the way down here. Okay, all the way from $5 down to 20 cents. Yeah, and I believe some have not even exited after those two unfortunate incidents. All right, so no, do not be like that. When you see something happen, do find out if it is a very impactful long-term thing, exit, don't think about it anymore. Right? Okay, now, so that's for Malaysian Airlines. Okay, now another thing which I like to do is, okay, let's just say for instance, there's this company that you really love, okay, really love, and then that company does well, but then for some reason you look at the stock still making money, price comes down, okay, so what do you do? Okay, let me pull out my stock chart to show you. So an example is, let's just say, for instance, okay, company like the Naga, okay, I use the Naga again and again. You see, the stock price was $16. Okay, it came down here. After that, it recovered. So because of this, you have this idea in your mind that strong company, okay, especially the Naga, okay, one of the for the biggest power producer in Malaysia, okay, strong company will surely recover. Even though it dropped down to $1, it will surely recover. Because of that, you want to hold the company. Okay, any of you ever think like that? Anyone ever thought like that? You can hold. Yes, okay. So if you do that, let me offer you an alternative. So back to what I've mentioned earlier, if company is not doing well, all right, there are challenges in the external environment, market sentiment is not good, and it is a long-term thing, my advice is exit. But if you are feeling very sentimental towards companies, okay, which you have invested for a long time, let me offer you this solution. Okay, what if, okay, let's just say for example, in the case of the Naga, all right. So what if you had bought here $13? Okay, $13. Then of course, yes, you are very happy. Price has actually gone up. Then after that, price drops down. Okay, and price drops down. So and you have listened to my this webinar, so you know you need to exit. So you exited over here. All right, you exited over here. So maybe you made a little profit. Okay, made a little profit. Okay, then when it goes down and down and down, of course, you don't buy. Not until you can see there's a U-turn up. So with the U-turn up, then what do? You buy back here at $9.95, cheaper than what you had initially bought, right? And then, of course, okay, this is the price which I calculated. Okay, I did earlier when I was preparing for these slides. Yeah, so final price, okay, you buy it back here, then the price went up to $13.90. Okay, let's see how much you make in these two strategy, right? So first is, if you just hold your position all the way from buy to the final price. Okay, so you make money, yeah. Okay, you do make money. It's 13.90 to 13.90. No, sorry, 13.90 current price, final price. Okay, minus 13.06 your initial bought price. You make 20 cents, and then you come and tell me, "Quote, you see, I was right. I was right to hold the price." Okay, now for those who do this, you sell first. Don't care what happened. All right. So you bought here, you sell here. You made a little bit money only, 88 cents. Then you bought back at the low price, $9.95. And this is where it currently is. Okay. You make $3.95. So you add up together. Who makes more money? All right. Whole position, 20 cents. Those who sell first, buy back later when you can see the U-turn. Okay. You make $4.83. Isn't that a better thing to do? Okay, did I calculate wrongly? Let me see. Okay,
It
never
should
mind.
be 74 cents, right?
74 cents. Which one is that? Oh, here.
Whole position.
Whole
84
position.
cents should be
Um,
yeah.
okay, yeah, right. No, hang on. 84
84
cents.
cents for 84 cents.
Okay,
Yep.
thank you very much. Okay, yeah. So typo error, sorry. Okay, yeah. So 84 cents. So compare 483 versus 84 cents. Which is the wiser decision? Which is the wiser decision? So I know you're sentimental about this company, but you can do like what I'm suggesting to you. Something happened, don't think so much, exit first. When things goes down and you can see U-turn, maybe at that point you read the news, or then they say, oh, things are looking good for Malaysian economy. You can check the Tenaga's revenue are also growing, more and more people using electricity, everybody turns on aircon, whatever. All right, then you start buyback. And this is the final price. Okay, so are you convinced? Should sell if something happen, if something serious happen, something long-term happen to your stock, company not doing well, sell first even though you love the company and buy back later, right? So this is my strategy for you. Okay, another strategy, all right, another strategy is same thing. You are so passionate about your company, you don't want to sell. Okay, I want to introduce to you sell and switch. What does that mean? Right. Okay, what does that mean? Okay, let me pull over to you. Astro, okay, Astro Malaysia. Okay, assume that you bought Astro here, okay, at this level. Let me just say, $1.18 around here, lah. Okay. Okay. Then you hope that price goes up, and indeed, price went up for you. But after that, price came down. Okay, price came down. All right, and well, and that time okay, less and less people are watching Astro. More and more people are watching using the broadband. Okay, either you watch on your notebook, you watch on your phone, or even you stream to some other devices, right? So with that, okay, instead of you holding Astro all the way as it goes down, all right, is there a better thing to do? All right. Astro is already losing its competitiveness. Even though if you like Astro, if it goes down, you should actually exit. Now, instead, you can look for another company that is doing well. Okay, another company that's doing well. In this case, I'm using TM, Telecom Malaysia. All right. So what you need to do is you can sell Astro when you see that, hey, something is clearly wrong. All right. Maybe you lose a little bit money. Then you go on to the one that is competitively advantageous compared to Astro. All right. Less people watch Astro. What do? They have broadband. They have mobile line. Okay. They are watching it on their phone or watching it on their PC or whatever. Okay. Internet broadband is getting more and more traction. So instead, you jump ship, you go to TM. All right. And then so let's just look at final price. Okay. So TM went up all the way to 664, and then Astro goes down all the way to 18 cents currently. Okay, and what you have here is, okay, let's look at the profitability. Yeah, correct. So if you buy and hold Astro, you lose $1. Okay, 118 down to 18 cents. You lose $1. So this is your loss, negative. You exit or sell and switch. Sell and switch. Okay, sell and switch from your Astro, you lose, of course, 33 cents. But then when you jump on to something that is doing better, this is how much you make, 286. Combined together, this is a positive 253 versus the losing Astro, which is negative $1. All right. Yeah. So what I'm saying is, no need to, whatever company that you're holding on, if you see this going down, you can jump ship, all right? Jump to something that you can see clearly is trending up, okay? You can see here, it's clearly going up. And even if you do not know whether it's going up, you know that less and less people watch Astro, more and more people using broadband, well, for work, for entertainment, for everything, all right? So, TM. Why is buy into the price went up? Sorry, Richard, don't quite understand your question. You can clarify further. We'll sell tomorrow. Okay. Okay, now, so one thing which I want to say is I'm not, as a guest speaker in this webinar, I'm not authorized to give you stock recommendation and buy or sell advice. So whatever that we cover here are purely for academic purposes. And hopefully with this, whatever that you learn, right? Whatever that you learn, you should be able to make better decisions for your own investment. All right. Yeah. So that's the disclaimer from my side. Okay. All right. So now, so let me ask you the question. What is the current sentiment right now for the Malaysian market? Okay, let me go to the FBM again. BMKLCI, right? What is the current sentiment for the Malaysian market now? Okay, let me switch it to candlestick. Okay, yeah, so daily chart, yeah, all right. What is the sentiment currently for Malaysian market? Very bad. Okay, so I'm not going to give you advice, but then this is a right time and a good time to relook at all your investment, and then you assess it based on whatever that I've mentioned to you. Should you buy or should you sell? Should you hold or should you sell? All right. Yeah. Okay. So with that, okay, I've come to the 30 minutes, 1 hour mark. Okay. I will just pause here and then we'll go on into the Q&A session.
All right. Thank you, Koot, for sharing your principle and perspective on when should we cut loss, when should we hold, when should we sell and switch. All right. So, if any questions to ask our speaker today, please write your questions in the Q&A box. Right. Write a question in Q&A box, and we will address your questions. Okay.
Yeah.
We
So,
have a
so type your questions in the Q&A instead of the
mm,
chat.
chat box, yeah, because there are a lot of messages in the chat box, so I'm afraid that I may overlook your questions. Okay, write that in the chat box.
Okay. All right. Now,
We
so
have
the first sorry.
question. First question on my panel is: can you share your typical strategy for sell on the charts? That's from Stanley.
Okay, Stanley. Okay, Stanley is a name which we are all familiar with for those who knows Marvel comics. All right, so welcome, Stanley. All right, okay. So now the first thing is that when do we sell? Okay, we sell when you can clearly see the price is actually trending down. All right. So now, of course, you can use many methods, but then just look at this current FBM KLCI chart. Is it trending down? All right. Right. So yeah. So is it trending down? If it is trending down, then you know that there's something not good. All right. Then before you even sell, of course, you need to know what is the one that is what is causing it to trend down. And if that is a small short-term impact, of course, like what I've mentioned earlier, you can actually hold it. But if it is something which is long-term, something which is uncertain, like the let's just say for instance the 2022 2022 interest rate hike here, then maybe you want to exit first and wait for a reversal, the U-turn for it. All right, so the first thing that you need to do is you need to know the trend, whether it is trending up or trending down. Then the second one is, of course, you need to know, well, in Beyond Insights we teach our students how to look at support and resistance level. All right. Once it crossed that support level, a strong support level, and it still break through, then you can probably tell yourself, hey, something is happening. All right. And you should exit first and watch what happened later. Right. So in this case, well, if you can see, there's this support level at around 1,500. So yeah, so and it has actually breached that level. Okay. All right. So that's to answer you. All right. Then the
Right.
next question.
Yeah, thank you so much, Koot. The next question is by Joey Chok. How do we spot U-turn? Okay, I think what she means is reversal pattern, right?
Okay, all right. Okay, so that one requires more time to explain to you. In our workshop, what we do is that we teach students how to spot the trend. That's very important, which I've mentioned. Then second is there are signals that you can look for to know whether the reversal is actually happening. So let's just say, for instance, in this case, right. So IBM KLCI, you can see it was coming down all the way from 2022. Then at this point, you can see the price is not going any lower. Right, let me just make it nicer. Right, so last time it went down, it went up, yes, correct. Then it went even lower. Then after that it came down and then went to the same level here. And after that you don't see it going any lower. All right, so that's our first indication saying that maybe the bottom is already near. Then another one is if you look at it, it is actually going higher and higher compared to last time. All right. Yeah. So those are your signals telling you a U-turn is actually going to happen. Then, of course, you can also use indicators like the EMAs to also tell you that U-turns are happening. All right. So that's at high level, how to spot the U-turn. Okay. How would I apply? Okay. Sorry. What's the next question? Yeah.
The next question is how would you apply your principle on blue chip counters such as Genting? Okay, Genting took a nosedive
Okay.
lately.
All right. Oh, okay. Wow. All right. Okay, let me just see what happened here. Okay, so back on this. All right, what I've mentioned earlier, the trend. Okay, so the trend is very important. You must be able to tell the trend. So for the one who asked this question, can you tell me what the trend is? Can you tell me what the trend is? Okay, okay. So maybe you're not typing. Okay, never mind. So the trend is down. Yes, very, very bearish down. All right. So, well, if the trend is down, then the first thing you need to do is, of course, exit. But actually, even without looking at the current prices, you can tell that the price has actually well stabilized over here in the past, and it could not hold. All right. So at around here, price started to come down. So if you were holding Genting, you should do like what I mentioned earlier. Okay, something happened, go and check what has happened. If it is due to things that you can see, dropping sales, bad management, or whatever, and these are long-term things, get out is your first thing that you need to do. All right. So that you will not suffer over here. Okay. Then let's just say, for instance, you didn't exit and you are all the way here now. Okay, you didn't exit yet. You're all the way here now. And you are wondering, what should you do? Okay, so at this point, you need to do like what people say, draw a line in your sand. Okay, draw a line. If it goes below this, then yeah, you just exit. Okay, this is at very high level, very high level, right? Okay, maybe it's going to do U-turn, okay? But then if it goes up, then doesn't matter. You exit, you can re-enter again. All right, you can re-enter again, just like what I've mentioned to you. Yeah, on the Tenaga case, you can re-enter again, no problem. Okay, where's my Tenaga chart? Yeah, you can re-enter again here. Okay. Yeah, you can re-enter again. You exit, yeah, doesn't matter. Let it go, show you a clear U-turn, then you re-enter again. No problem. All right. As long, yeah, but if it ever comes down further, then of course you're spared from that, well, from that further price fall. Okay, right. Then what's the next question?
All right. So the next question from Steve is that if you already suffer heavy losses like 50% or more, is it still rational to cut loss or we just hold on to it?
Correct, yes. So, yeah, so when you say that, yes, you have already suffered a lot, and should you cut loss? Okay, let me just see if I have any. Do you have any ticker for me to show you?
No, let's say Genting, right? You
Okay,
buy at mm, let's
okay, let's
see,
just say for
five
example,
ringgit.
we bought here. Okay, yeah, we bought at 5 ringgit here, right? And then price has come down to this level, or you lose nearly half of it. Okay, so the question is, let me ask you, all right, Genting, what's the reason why Genting price fall? Bad management, losing sales, and things like that, right? Right. So is the management sorry, I will say this, has the management improved? Do you see evidence of the sales going up? Do you see their business doing better and better now? If you see it's doing better and better, then it goes up. Good. If you don't see it doing better and better, what do you think the price is going to be like in half a year time? Okay. If the bad business can get even worse. Just like last time when Apple was introduced, BlackBerry sales drop and drop and drop. Then people say, yeah, after a while you recover. No, it dropped and dropped and dropped until now nobody buys BlackBerry. Yeah, so business can get very bad. So even if you like Genting, okay, you know Genting, you have been investing in Genting for a long time. If it's going down, let it fall. Get out, let it fall. Then when it recovers, back to what I've mentioned about Tenaga, when it recovers, show you the U-turn, get on. You can just jump on the boat again. Doesn't matter. Then and okay, I think one of you mentioned PE. Okay, all right, PE. Okay, so some of you can say that the price can actually fall down and then reach to a certain level where the valuation or the PE is very attractive, and you think that people will jump in. All right. Okay, so your job as a retail investor is not to jump in first. Let the big guys jump in, push the price to U-turn up, then only you jump in here. Okay, and then the price goes higher up and higher up. All right. So your job is not to find the bottom. You don't do bottom fishing. Let the U-turn happen, then only you get in. Okay. If the big investors or the big fund manager, KWSP says that the price is very cheap, they want to buy, let them buy first. Then you see a clear U-turn. That's your point. Okay. Right.
Okay, so what if you see management who support the share price, right? I think I read a news that the Genting Lim family is using like 20 million, okay, to support the price. Is that considered big money? Should we
Uh,
go in?
okay, all right. C, okay. Has the U-turn happened? All right, all right, so this is just a small hook, okay, not U-turn. So U-turn looks like this. Okay, U-turn looks like this. U-turn, okay, good. So let's wait for the U-turn first before you make any decision, you see. So we don't want to buy. Okay, so for those very, very lucky one, maybe they buy here and price goes up. But it is not too late. Buying here carries a lot of risk. It is actually safer to buy when you can clearly see a U-turn, then only you enter. All right. And you have better sleep. Okay, you don't need to buy here and then worry, hey, is this a U-turn or is it going to come down even further? All right. So wait for the U-turn.
So this is not a meaningful U-turn yet. It is a bit
Not
more
a big.
shallow, huh?
Yes,
It's just a
exactly.
hook,
Okay.
not
A
a
small
meaningful
hook.
U-turn.
Okay, exactly. Yes.
Only.
I
All
mean,
right.
for
So
those who
high
thought it was
risk.
a U-turn, this was a U-turn, right? Was this a U-turn? No, it wasn't. So will this be a U-turn? You don't know, right? So let's wait for clear U-turn.
So what do you want to see? You want to see a higher low?
Higher low, of course. And then, of course, there's also a break of the trend line.
Okay.
Yeah,
So wait for the break of trend line
break of the
to
trend. All right. Yeah.
confirm that this U-turn reversal is
Okay.
meaningful.
Yeah,
Okay.
there's a few signals which we track to see whether a U-turn has happened. But the simplest one and the first one that we look at is always the break of the trend line. Yeah.
All right. Now the next question by Lai Feng is that now since the broad market is trending down at the moment,
Mhm.
so would it be more beneficial if we switch to dividend stocks?
Ah, okay. Right. Good question. Sorry, good comment. Let me just see if I can turn on the dividend for Genting. Let me just see. Let me see if I can turn on the dividend for Genting. Dividends. Okay. Right. So let me just see how much dividend does Genting give. 5 cent, 1 quarter, 5 cents, 6 cents, 5 cents, 6 cents. Okay, let's just say for instance, Genting gives you 20 cents dividend. All right, 20 cents dividend. So current price is here. All right, current price is here. Let's just say $3. Okay, and then you get 20 cents dividend per year. Right, 20 cents dividend per year. Okay, what if the price drops down to $2? All right. Okay. Assume, okay, I'm not condemning Genting or saying it's going to go down to $2, but hypothetically, what if it drops down to $2 and you happily get your 20 cents? Okay, you happily get your 20 cents. Okay, price loss $1. Okay, so is it worth it? $1 minus, sorry, $1 negative plus 20 cents. So you still lose 80 cents. You still lose 80 cents. So what do you think of this? Is it a worth it thing? Right. Yeah. So dividends, bringing in dividends into this discussion is only relevant if the dividends is actually very substantial. If it is not that substantial and you see things are dropping very fast, then the loss in the company stock value will outshadow the dividend value that you get. Okay. So probably not very worth it. Okay. But of course, if the dividend is like, oh, $1 dividend, okay, then of course it's worth it. I can, you drop $1, but I get $1. Okay, good. Then it's probably worth it to see. And then if let's just say go up, then good, you make back from the stock price and you get the dividend on top of that as well. Right. But if it is not substantial, then it's probably not worth it.
But what if we switch to a more low beta dividend stocks like REIT, real estate investment trust, right?
Okay. Yeah, I think the REITs typically give you like 8-9% per year. Okay, some of the very good ones. Yeah, so yeah, okay, let's look at one of the more popular REITs. Let me just see. Okay, I think this, okay, right, talking about that. IGB REITs, I think, okay. So you all should know this REITs. Okay, now this one is different. Look at the trend. The trend is actually going up. And of course, with the dividend, then it's actually worth it, right? So this one is no brainer, no question. All right, this is I mean, this stock is looking very good. So how much is the dividend? I think per quarter you get 2 cents. So that's like 1%. Okay, 1%. Actually, not substantial also. It's 50 cents. Let me just calculate. So let's just say 0.03 times 4. That's 12 cents. Okay. Divide by 230. Okay. That's 5% per year. Okay. All right. 5% per year. So, but then this is a different chart. This chart is actually going up. So yeah, you don't have to consider so much. It's doing pretty well. Okay. Yeah. Okay. All right. Any next question?
All right. So the next question is, can we use purely technicals or price action to determine our entry and exit without fundamental?
Okay. All right. Thank you for that question. So there are many strategies in the world. There are some strategies like what Warren Buffett does. He even in some of the books is written that he doesn't even look at the stock price at all. Okay, and then there's of course people who strictly look at technical charts. So yes, there are such strategies looking at technical charts. But if you want, how should I say it, in our workshop, Beyond Insights workshop, we actually want students to learn both. Because sometimes you do have cases where the stock price is just like this, but then the stock is here because it is in a consolidation phase and the fundamentals for the company is doing very well. So you just hang on for a while, waiting for a breakout up. All right. So knowing the fundamentals plus knowing the technicals can actually, let you buy into this stock ahead of others, you see. Yeah. So combining technicals and fundamental is good. But yes, there are strategies that just uses purely technicals to look at, to decide on your entry and exit.
Thanks for sharing your perspective. So Stanley would like to ask the follow-up question, which is, now, as for the tariff war that we have right now, will you consider this as short-term or long-term trend?
I will say for now, we will consider it as long term.
Long-term.
Yes, correct.
Could you explain a bit?
Yeah, correct. Until there's a change in the Trump administration's policy. Right. So right now it seems to be hell bent on tariffing everybody. Yeah. So for now we consider it as a long-term thing.
In I think in 2018, the tariff had caused the US market to decline by 20%. So
That's
how
right.
long do you foresee this
Okay.
will last, right?
Let's just look at the FBM KLCI for the impact. Okay. All right. Yeah. So 2018, 2019. Hang on. Let me just reset this. 2018, 2019. You can see here. Yeah. Okay. The stock price for, the price for, or the index level for FBM KLCI actually dropped a lot. Okay. So as to prediction of how long it can last, we don't really do prediction. All right. So prediction is a word where we stay away from. What we do is that, we monitor the news, monitor the macroeconomics, and we also monitor the chart. And when it recovers, then we will say that, yeah, it actually recover. So, and that is what I would advise all of you. Do not predict the market. Oh, predict this is the bottom. You buy the bottom. If you ever get into the bottom, it is by sheer luck that you got into the bottom. All right. Waiting for chart to show you reversals, that is actually a better way. Or you monitor news, okay, when the Trump administration actually reverses their stance or whatever. All right. So instead of doing the forecast.
All right. Thanks for sharing your perspective, Koot. Eunice would like to ask this question. Does this strategy also apply to ETF?
Okay. Yes. Okay. Now, so ETF, is there an ETF that you want to mention? Okay. Then we can look at the chart. Okay. But ETF generally is a basket of stocks, right? So You have good companies, mediocre companies, and so on. Or S&P, okay, that's US stock. Okay,
Yeah.
right.
I think
Since
you mentioned we
yeah,
look at SPY or VOO.
all right. So we look at the ETF for S&P 500, which is SPY. Yeah. All right. Hang on now. Let me just show you. Okay. Let me just reset the chart. Right. Yeah. So you can see here, it has been going up. Well, market is open. Yeah. It has been going up. All right. And then recently, of course, because of all this tariff concern, okay, it has actually dipped something. All right. So should you exit or not? So like I mentioned, ETF is a combination of many stocks. Some ETFs actually group it by certain industries. Like for instance, you have ETF for healthcare, ETF for technology companies, ETF for communication companies, and so on. All right. So you don't have a specific company to look at. It's actually a basket. And with that, what you want to do is you want to monitor the news for the whole sector or the whole industry under that ETF, right? Yeah. So let's just say, for instance, okay, if you are looking into healthcare, all right. So the XLV is the healthcare ETF for you, SPDR stocks, okay, healthcare, right? Yeah, so you can see not very stable. Okay, then you can do your analysis. Hey, what's happening in the healthcare sector in US? All right, and then you'll find out that Donald Trump actually appointed one of his guys who is actually anti-vaccine. So maybe that will not do well for the drug companies and so on. So you can find out the news. So it's not confined to single company news. It is now looking at sector. Okay, gold. Okay. Gold. I don't. What's the ticker for the
Yeah,
Malaysian?
we have Malaysia have a gold ETF that's issued by Trade Plus.
Okay.
Yeah, you can go to find lah. The ticker is gold ETF, GOLD ETF.
This one. Oh, Trade Plus. Okay. All
Trade
right.
Plus Sharia Gold Tracker. Yes, that's right.
Okay. All right. So, okay. I won't see anything else. What do you think the trend is like for this gold? Let me just see
Mm.
if there's any past. Yeah. Okay. So, what's the trend like? Okay. Yeah. So overall, it seems to be in an uptrend. Okay. Right. So then your question is, if you are looking at exit, then of course, if it is going up, of course you don't exit, right? Uh, Okay, so holding gold at this point, if you're a long-term investor, it should be good for you. And of course, things will not last forever. All right, you can see here there are cases where gold price actually reverses down. Okay, right. Let me just see. Gold price reverses down, or even this one, even steeper. Okay, gold price reverses down. So you must know when's the U-turn and then exit at that U-turn.
Mm. All right. Now, Kut, just now you mentioned that you see this tariff war or trade war as long term. So the question by Mark is that then do you think the current market sentiment is likely to be long term or short term? He is referring to a bearish market sentiment.
Okay. Well, is it going to be a long? Okay. Now, so I won't comment on the Malaysian stocks. Let's just look at the market where all this started to happen, which is the US stocks. All right. Yeah. So there are certain levels you can see here, I've drawn here, certain levels where if the stock price actually come here and rests, okay, then you know there are how should I say, there are fund managers who think that it is a good buy at that point. Yeah. So this may be some of the levels where it reverses. All right. Okay, but then of course, the Trump administration can come up with even more things, right? So you really don't know what is going to happen. What we do is that we, as traders or investors, we look at how it reacts to this level, and then, well, if we talk about the U-turn concept, yes, if it U-turn from here, then we will enter. But of course, just like what I've mentioned earlier, whatever that we buy, we know we can be wrong. Okay, back to what I mentioned. Whatever that we buy and enter, we know we can be wrong. So we never, a professional investor or a veteran investor, never put in so much, buy so much to the point that if he is wrong and the stock goes down here, it hurts him so much. All right. No, you don't do that. So You buy at the quantity that if you are wrong, you're okay, right? If you're right, of course, you make money, big money. Okay, but if you're wrong, you get out already. Then that's where what I've mentioned earlier, the stop loss comes in. Right. Yeah. So we don't how you say, we don't manage the market in a way that, oh, we have a conviction and we think you will always be right. No, we don't do that. We
Mm.
allow things to go both ways.
Thanks, Kut. The next question is by Mahalingam. So we know that foreign investors have been selling for the past 20 weeks. So any suggestion on how to look at the current situation when the investor return back?
Okay. All right. So back to the U-turn concept, right? You will know the investors are back, okay, when you see the stock price U-turning back. Okay, of course, don't take all these small things as a U-turn. Okay, hang on. Let me go back to FBM KLCI. Yeah. Okay, let's just take the olden day. What happened last time in the past. Okay, so some of these small U-turns are not really valid U-turns. Especially you can see the trend here is still coming down. Still coming down. All right. Yeah. So you must know how to look at what is considered as a U-turn, right? But yes, if they come in, if the stock price reverses up, yes, that is a clear sign that the investors are back or the market is doing better already.
Mm. All right. So Hong would like to ask, what is your view on adding position to bring the average cost down, hoping that when it U-turns, then we can make profit easily.
Okay, all right. Okay, let me just see. Okay, now that's this saying in the market. Okay, so what you're doing is this. You want to, let's just say for instance, you bought here. Okay, you bought here, buy. Okay, oh, then price comes down. You feel the pain. But if you buy again here, then your average price is here, right? Okay, average price. Okay, so with that, hopefully you don't think that the price, you don't do so much, especially when the price goes up, because your average price is here. But that is only if the price goes up. Your strategy will work. Okay, averaging here. If the price goes up, you make, yes. If the price continue to come down, you lose here and you lose here as well. You are adding losses to your position. Okay, right? Yeah. So when you don't know whether the price is going to go up and you are clinging on to this idea of hope, hoping that you'll go up, and then you use this to, well, to how should I say, to average your losses, then it is a very dangerous thing to do. Okay, so generally for our students, we tell them, oh, never do this, a taboo, never do this. When the price is coming down, the more you buy, the more you lose. As clear as that. If the price is going up, then of course you can do that. The more you buy, the more you win. Not in a losing position.
All right. So you prefer, your style more like do average up lah, instead of average down, right?
Yes,
On
average.
average up on a long term uptrend.
Correct, yes.
Okay. So how do we spot big investors? Just now you were mentioning big boys, right? We want to wait until big boys push the price up, then retail investors come in, right? So the question by Joey is, how do we spot them entering the market? Is there a way for us to track?
Yeah. Okay. Now, so to be okay, unless you know someone from the from the statistics department or whatever, those who are tracking or even Bursa people looking at the statistics. If not, it is hard for you to know when the big boys are coming in. But you can tell from the volume. Okay, you can tell from volume. Okay, so let me just find the volume indicator. Okay, hang on. Oh, sorry, this is the index. Let's just say, for instance, okay, let me go back to the stock I've been using again and again. Okay, so from the volume indicator. Okay, now, so volume indicators for long term, sometimes, sorry, excuse me, sometimes does not really give you a clearer picture. All right. It works better when at certain time range. Let's just say, for instance, this one comes down, comes down, comes down. Then, yeah, okay, this one is also not very clear. Okay, yeah, so At certain points like this, you can see volume spike. Then if the price also goes up, then you can think that, yeah, there are people who actually buy, okay, and the volume is high, means they are buying and pushing the price up, okay. Like this one, you can see here, red volume, which means to say the candle or the price at that point actually dropped. So when it dropped, high volume associated with that long candle. Yeah, so you can tell that, yeah, there's actually a lot of people selling, or big funds, they're actually selling at that point. So over here you can see, oh, yeah, high volume selling. Okay, and then after that, okay, sometimes you can see the high volume, but after that you can clearly see if the price is coming down, then you know that, hey, there's people selling in the market already, exiting from the market. Let me just switch it to monthly candles and see whether that helps me to see clearer. Okay, so you can see green pushing the price up. Then, you can see more and more red now. Yeah, so a lot of people selling, or a lot of funds are selling. Let me just see what happened in the past. Okay, you can see, yeah, a lot, for many months. I think for what, a few months, nearly one whole year, price are being pushed all the way up. So you can actually look at volume, but I would say that, yeah, you do need some experience to look at the volume as well.
All right. Thanks, Koot. So let us do one last question, which is not about stop loss, okay, which is take profit, right? So this question is by Jia Jie. So I find that sometimes it's very difficult to take profit also. So do we apply the same principle when it comes to taking profit off the table? So that's a question from Jia Jie.
Okay, all right. So that's a question which is a bit difficult to answer. Why? Because every single strategy that you apply will have its, by design, okay, will have its own profit taking, I would say, process or instruction. Let's just say, for instance, if you are a swing trader, okay, let me just change. If you are a swing trader, okay, let's just say, for instance, okay, if you're a swing trader, maybe you want to buy here, okay, you want to buy here, and then after that, when the price reach around here, you want to exit. Okay, if you're a swing trader, all right. So your strategy itself should include when you buy, when and where you buy, and when and where you sell. All right. If you are a trend or investor, okay, let me move this. Let's just say, for instance, I'm an investor. All right. So yeah, I will buy. Okay, I will buy here when it comes to, well, consolidation point or near to the support. Then I will exit when, let's just say, for instance, the trend is actually broken. Okay, then you exit. So that depends on that depends on your strategy here, when the trend is broken here. So you exit. All right. Yeah, so you exit. So that really depends on your strategy. Yeah, so if your strategy does not have the rule when you enter, when you exit, then you do need to get a new strategy. All right, or do need to research more on your strategy. Yeah. So strategy must have when you enter and where you exit.
All right. Thanks, Koot. So that's all the time we have for this Q&A with Koot. So ladies and gentlemen, this is Koot, who is a senior trainer from Beyond Insight. Thank you so much, Koot, for sharing your perspective on how
Okay.
should we manage our losing position. All right, so for our next session, it's going to be conducted in Mandarin. It is titled "Can Slim 法则暴涨股票的特征." So in this session, we're going to explore this famous strategy use, which is Can Slim. How do we use Can Slim approach for us to find high growth stocks? All right, so it's happening on 17 March, 8:30 to 10 p.m. So if you want to learn how do we apply this principle it comes to picking high growth stocks, please register for this session. I just enter the link in the chat box so you can register for this session that is going to be conducted in Mandarin. So if you're looking to open a new CDS trading account, you may scan the QR code or click the link that's given you in the chat box so that you can key in your interest, and we'll do our best to match your preferred broker to you. So with that, I want to thank all of you here for being a wonderful audience today. Thank you so much, and hope you have find value in this session done by Koot from Beyond Insights. Thank you, everybody.